Good morning to everybody, and we're live. And thank you very much for joining us on the other side of 8 a.m. on Behind the Markets.
Munyumba, you might
And
want to check your mic. Are you able to get me? I'm not able to get you on the
very
other
clear,
side. Are you able to get me?
very clearly, actually, very clearly. um, that's. I don't know if you're able to hear me, Stephanie. Right. So as Stephanie gets set up, let's actually start moving into this morning of Behind the Markets. I would say good morning to Stephanie, but I'm not sure if she can hear me at the moment. But good morning to everybody who has joined us today live on social media and live on our radio audience. If you're able to hear us, and Stephanie, I don't know if you can get me now. And a good morning to you, my dear co-pilot.
Good morning, Munyumba. How are you?
I'm fine, thank you. And we have takeoff today. Thank you very much for our bumpy little start, but we are getting ready for takeoff. It is Enterprise Thursday, and we are going to get ready to get through what the market has to give us. Now, let's transition into the daily data market roundup. We have seen today that we have the Kwacha trading at about 19.519 against the dollar. Dollar is up 0.87%, 0.38% up on the week, 3.15% up on the month, and 8.26% up year to date. We do see that the dollar is still in a buying position. The stock market jumped up by 1.69%. That's our main story for today. Up 3.86% on the week, 5.66% on the month, and up 18.52% year to date. And we also see the bond market was up 0.1% yesterday. As we saw in dollars, it was down 0.33%, and interest rates dropped back down to 25.5076. We have seen that, as we said, stocks are up. The US dollar has gone up again in terms of acceleration. It is in the middle of an acceleration, pushing the rates up. It's 13% away from its all-time high, while the rand is still trading below where it was 30 days ago, 7.5% exactly below where it was 30 days ago, and down 4.34% year to date. But it's still trending upwards. Now it's below its 200-day moving average of 1.03.46. So while the dollar is above its 200-day moving average. So you can see that the pressure is still that we have a slightly weaker rand, but it's still highly volatile, and that's poor for the offshore trader community. GRZ bond index, you can see, was up 0.1% and up 16.88% on the year, up 2% on the month as we await inflation. And there is a bond auction that's closing off today at 4 p.m. today. So we should also see what the impact of whether we're going to have a second oversubscription in the bond auction from last week. Remember, there was a full explosion of bonds that came in. Whether that was pent up demand or whether this is a continuous flow, this and the next auction are going to tell us what the trends and whether we're now into that tide shift where we're getting a lot more offshore investment coming back into the market. We did see that the bond index as well in dollars is down 0.3%, but up 7.92% year to date. And on the month, down 1.16%. This is mainly due to the negative performance of the Kwacha over the last month, while interest rates are down 0.003%, but still up 0.86% year to date and down 0.01% on the week. On the commodities board, we have seen that copper sunk to a 2-month low on fears of what's happening in China, down 0.09%. While we also saw the copper, on the year is also down 2.37%. Oil is down 1.63%, also on the same fears to do with China, down 2.93% year to date. While gold also sank yesterday by 0.49%, but still up 5.41%. This is all in dollars as of yesterday's close. Wealth insurance assets in terms of Bitcoin in Kwacha is up 0.1%, mainly due to the strengthening of the Kwacha. You saw that up. It's now trading at 89.87% on a year to date. While we're also seeing Ethereum was dropped down by 0.2%, but still at 64.45% year to date, mainly due to the first quarter performance. And gold is up 0.29%, mainly due to the performance of the Kwacha. which pushed it up and also reversed the losses that we saw on the gold market. Now, in terms of year to date, this is where we're looking in terms of the broad asset market. Bonds up 16.9%. Stock markets have now overtaken them with 18.5% due to the performance of the billion kwacha stocks. Your dollars are up 8.3%, just breaking even on inflation. Gold is up 14.1%, and Bitcoin is up 89.9%, and Ethereum up 64.4%. This is in kwacha. Now, if you take a look at this in terms of quarter to date, here's where we stand. Sorry, wrong date there. But in terms of quarter to date, here's where we stand. The blue line showing us quarter to date. Bonds up 3.12% since the end of quarter two. Stocks up 5.51% since the end of quarter two. Dollars up 11.39% since the end of quarter two. Gold up 11.19% since the end of quarter two. And mainly all of these have to do with just the performance of the dollar, which have risen the value of gold, Bitcoin, and Ethereum. The underlying assets have all underperformed. Actually, since the beginning of quarter two, Bitcoin up 6.04% since the beginning of quarter two and 5.7% Ethereum. All of that is due to the fact that the dollar has performed. But you can see the stock market is now starting to outperform the bond market, meaning a little bit of risk sentiment is starting to come back into the market, but also mainly because of performance of billion kwacha stocks. Now, in terms of our four horsemen, what they're showing us is that we're seeing that in terms of Britain yesterday, we saw a lot of inflation data. Our core inflation in Britain stayed the same. That was a big point, but core output, PPI output, dropped to 2.3%. RPI outputs, in other words, RPI inputs, also dropped by 7.9%. And also the main CPI, the headline CPI, dropped by 6.8%, meaning that the UK is starting to experience lower food prices and oil price and energy prices. That is actually bringing inflation down. Input prices also stayed negative for manufacturers in Britain, down 3.3%. But however, one of the things that pushed crude oil and that we've got that as a tailwind is actually a bit of a headwind. We did see crude oil inventories in America drop by 596 billion, pushing potential oil prices up. And currently, we are fending issues in the oil market. Sorry, Stephanie, I think we're having a little bit of an issue right now. Now, we also did see yesterday that the interest rate decision from Namibia showed that the Namibian central bank kept the interest rate still at 7.75%, while we also saw that the Letras auction in Spain, the 3-month auction, showed a 3.5%, a move upward from 3.5 to 3.51%. That's a headwind of higher interest rates. The 30-year Bund in Germany moved up from 2.4 to 2.68%, while mortgages in America moved up from 7.09 to 7.16%, causing a slowdown in the U.S. property sector. This is where some of the problems are starting to show themselves, and this is where we will get even economic slowdowns that are affecting even China as well. Simultaneously, we're also seeing income trends giving us mixed reads. Yesterday, we did see that employment changes in Europe did slow down to 1.5%, and quarter-on-quarter, it slowed down from 0.6 to 0.2%. But we also did see that GDP quarter-on-quarter in Europe rose to 0.3%, and quarter-on-quarter GDP and year-on-year, as he still also is up 0.6%. Now, retail sales in South Africa were down 0.96% year-on-year in the month of June. That's also showing economic slowdown in our partner, who actually brings in a lot of capital and a lot of businesses and is the signal of economic growth for Southern Africa. Simultaneously, we did see housing price in the UK still rise by 1.7%, but slower. Industrial production in Europe was down 1.2%. Mortgage applications were down 0.8%. In the US, building permits were up 0.1%. Housing starts were up 3.9%. Industrial production in the US is negative, but it was a bit slower. The contraction was a bit slower than last time, and manufacturing production was up 0.5%. So we are seeing a bit of mixed reads in industrial and income, but we are getting some pushback in terms of elevated interest rates, while inflation is elevated but slowing down. And that's the mix of what's happening in the market. We still have a global environment that is relatively inflationary, and we are facing a little bit of a slowdown. Now, let's get into a few deep dives for the day. The biggest story that came out yesterday is the Lucid touched another all-time high. This is another period. It's really been breaking a lot of records this year, but it went to another all-time high as Airtel jumped back to its highest share price since July 2008. and it's gone back to its highest valuation of 4.52 billion kwacha. So Lusa Index yesterday is now 18.52% year to date, and closed at 8,696.51, thanks to a contribution of Airtel Price Rally and Puma Energy, which both went to new all-time highs. Airtel shares are now at 43.5 with a valuation of 4.52%, up 152%. Now remember, in terms of their PE ratio, estimated. This is just an estimate. It doesn't mean that this is where the price is going to go. This is what we call the fundamental estimate. This price still has it's in terms of it becoming fair valued against its earnings. It still has room to move somewhere around the price of 50. Actually, that's probably where the share kind of sits. So it's still underpriced until it hits somewhere between 50 and 55. In terms of where it is at fair valuation. Now, I must warn you, by giving you an expected valuation versus the earnings per share, that does not mean that's where the share is going to move. That is due to market forces, but that is where the share would be fair priced against its earnings. And remember, we use obviously the risk-free rate. So we're looking at about an EPS which should have a benchmark somewhere around 6.65. That's what we should be looking at, an EPS somewhere around 6.65. That's what the stock should be looking at. Sorry, not at the EPS, a price to earnings ratio of about 6.25. Sorry, 6.25 is where we've been looking at in comparison to what we're looking at as the return on investment, let's say, of a 364-day treasury bill, which is giving us about a 16.05% return on investment. Now, that is giving us a benchmark to say that currently with an EPS of just about 5, it means, a PE ratio of just about 5, the stock is still underpriced and still has room to move forward. Now, also their growth prospects. So you're always looking for stocks that have future growth prospects that are underpriced. Puma Energy, on the other hand, is barely fair priced. But remember, they've got some strong growth opportunities, especially in the LPG gas sector, which they've just recently invested in with the purchase of OGAS, also up 52.5%. Now, here's a table, by the way, to show us the billion kwacha stocks. Remember, I've been talking about the billion kwacha stocks club. These are the top stocks in the economy. The biggest stocks in the economy, the stocks that have got a market capitalization of a billion kwacha or more, except for ShopRite, because that is a store that the ShopRite shares are mainly ShopRite Global, which sits in South Africa, which is a South African company. And most of its economic activity comes from South Africa. So I'm looking at mostly shares, obviously, which are companies which are domiciled in Zambia, and their investments are mostly here. So if you look here, the top share, if you look at the top 10, these are the top 10 companies in the economy on our list, listed on our market with a market capitalization of a billion kwacha or more. And only 10 companies have got that. So if you're ever looking for an index of shares with a billion kwacha or more, this is what I call the billion kwacha club. Now, these are the compositions. So you're looking at about CEC currently makes up about 17.96% of the total market cap of this country. Now, if you remove ShopRite, the market capitalization of Zambia is about 45.7%. Now, year-to-date performance of CEC has been about 8.2 billion kwacha, and it's up 33.6% and makes up about 17.96% of the index. ZCCM used to be the number one company until this year, where CEC dethroned it. It was 7.67 and it's up 10.6%. Obviously, we're waiting for the mid-year results. Remember that ZCCM has got a new business model of receiving royalties from Kansanshi as opposed to receiving dividends, which is set to actually at least guarantee a higher and more regularized cash flow. Zambia Sugar at 5.7 billion kwacha, up 0%, makes up 12.47% of the index. Zanaco at 4.98 billion kwacha, makes up 10.9. And the new entrant in the top 5 is Airtel at 4.52, up 152%, makes up 9.89% of the index. Zambru 3.82 billion, makes up 8.36%. Chilanga Cement 2.79 billion, makes up 6.11% of the index of the total market capitalization ex ShopRite. Standard Chartered 2.5 billion, makes up 13.6%, makes up 5.47% of the market cap. Puma Energy 1.22 billion, up 52.5%, makes up 2.26% of the total market cap. Was Avico which is the number 10 out of the billion kwacha stocks. 1.01 billion makes up 2.21%. So you can see where the breakdown of this. Now, the 10 billion kwacha stocks out of the 23, 24 listed companies make up 90.8% of the total market cap. And this is the reason why when these stocks move, they take the whole market cap with them. Okay, so when these stocks move, they take the whole market with them. So that's one of the things you have to bear into mind whenever you're looking at these, at why it is when these stocks move, the index moves in a much more vicious fashion. Other news that we've seen in the global markets yesterday was Fitch may rethink China's A+ rating amid global economic woes, especially if corporate debt conditions worsen. Current government debt levels were acceptable, and any deterioration in corporate debt could present a risk. So that's where the issue's coming from. And when they're talking about corporate debt, they're talking about the property sector and specifically Evergrande. That has been the nightmare situation for China at the moment. The firm also, now they're looking at Evergrande and said the firm also missed some coupon payments earlier. This is fueling broader contagion in Chinese debt markets, stemming from a potential default. So this is where the market is looking. And finally, some other news that we saw. Copper hits a near 8-month low on China risk. Worsening economic conditions in China could stymie copper demand in the world's biggest importer. Fears of default and contagion in the country's property sector also dented it, and also the risk of being downgraded. So I don't know if we have Stephanie back now so that we now can address our question of the day. And our question of the day is a relatively simple one, and it asks the question, what environmental factors most concern you about work and business? What environmental factors most concern you about work and business? Is it the political environment? Is it the economic environment? Is it social environment, technological environment, the physical or the ecological environment, or the legal environment? Stephanie, I don't know if you're back with us right now.
I'm around.
So the question I'm posing to you now is, what environmental factors about the economy we're operating in right now most concern you or most excite you where opportunities lie in your work or business life?
Have we lost you, Munyumba, on the other side?
Can you hear me now?
You might want to say that again.
I was saying, what environmental factors most concern or excite you in the Zambian economy? Is it the political factors? Is it the economy? Is it social? Is it technology? Is it the environment? Is it legal? Where do you see most of the threats and the opportunities in your workspace and legal? These are questions we want to throw to everyone. And I throw it to you first, Stephanie.
And just before I get to respond, if there's anyone who's listening to us via mainstream, of course, we're also live on Facebook. You could also get to comment in the comment section. That, of course, is Money FM Zambia 93.7. And on the mainstream, you can call us on 077 1616 290. So for me, I think it's about the political ground. Obviously, technology, changes in technology as well. I can't help but think, is the AI actually going to come and, take over, as well as the political ground as well, looking at the communication space, all about communication and stuff like that.
Okay, so I would say in my space, it's a mix. In my space, I think some of the mixes that I'm starting to see in terms of this, and I'm going to share the question for everyone here again. If you want to comment in, please feel free. What environmental factors most concern or excite you these days? Political, economic, social, technological, environmental, legal, and regulation. What are the areas where you see most of the threats, where you see most of the opportunities coming in? Where are your eyes right now? My biggest concern, Stephanie, is that too many people's eyes are on politics as an opportunity and the expectation that politics will improve their lives. Now, politics will support I'm a mainstream believer that the biggest change in the biggest opportunities in any society come from social and technology. That's what I believe, and especially inside social, I would say cultural. Okay, and
Mm.
for me, let's say in my space, I've seen a change in people's attitudes towards their family and their future. People are now planning their money better. They're taking retirement decisions much more effectively, and they're looking towards financial literacy a lot more. That is what I see has changed. There's been a social shift in the attitudes of the Zambian people. It hasn't specifically been a government policy that has driven Zambians to actually want to now start investing more and planning their retirement and their finances a bit better. It's been the experience of seeing possibly their parents retire not so well. It's been the experience of seeing friends not lose their money in poor investments. It's the experience of seeing a property market that went belly up after many years of being told property was the only safe asset for the last, I think, decade. Property, especially around 2015 to 2020, really suffered, by the way. It was a tough industry. It possibly is trying to make a comeback, but with high interest rates, slow economic growth, and almost no buyers, it became tough. So I think the experiences people have has changed their views on things, and therefore they're starting to look at financial assets a little bit different. So social perspectives have really created an opportunity for us as a business. So that's where I see a more secular shift. And then secondly, technology. People's access to information has really improved in Zambia thanks to the advent of the smartphone, Google, and internet. All these things have really proliferated through society a lot, that people are hungry for information like they've never been before. And therefore, the hunger for information and social communication that has happened, the rise of that. Zambia has gone from 300,000 to 3 million people who are now on social media, on Facebook, and we're heading towards about 4 million. When you start adding the fact that we got over 1 million people on Instagram, though some of them are the same people, over 1 million people on Twitter as well, and we're growing very fast, even in areas like TikTok. Social communication has become a very fast spreading thing as well. So there is a change in the way technology and culture has started to operate amongst the Zambian young people. So financial culture, technology, even when you look, by the way, at financial literacy by age, you find that younger Zambians, those who are below 35, are much more financially literate than older Zambians, actually,
Mm.
who are the ones who are above 35, and the ones who are close to retirement are almost very negligible in their financial literacy. So also changes in demographics in terms of our ages. Remember that we've got a young population, so we kind of cycle out generations very quickly. So the younger generation are now, remember that the population of this country that is below 40 in terms of out of the total adults makes up 70% of adults already as it stands. 70% of the adult population are below 40 in this country. So they're younger. They are the social media generation. They are the people who were there when Facebook took off. Remember, Facebook is only turning, I think, 16 now. In Africa, globally, Facebook is about to turn 20 next year. So we are part of that generation as Zambians. So a lot of what's happening in the space of technology, and I'm not talking about the high level stuff like artificial intelligence, which, by the way, is coming and it's going to start changing quite a lot. Even things like writing. Artificial intelligence can now write letters for you. And I've used that stuff before. Artificial intelligence can rewrite emails for you. Artificial intelligence can even help you get ideas for scripts for radio. Yeah, this is how far it can go. I've tested some of that stuff before. Artificial intelligence can help you write what you should be putting in a website. Okay, if you just give it an idea, artificial intelligence can now start working that stuff out. So a lot of the work that people are doing can actually be pseudo replaced by artificial intelligence if they're not careful and start learning how to use it. But I'm looking more at the biggest and most pervasive change in society is social media. Us in the media space, Stephanie, have been changed drastically. Companies are now competing. Companies used to, 10 years ago, companies used to make the decision of whether to put their ads on radio or television. Now you are competing with them directly interacting with their social media audience. Companies are now deciding to wake up in the morning and say, hey, why do we need to go on air when we can start our own podcast? This is stuff they're doing. So we have to start making shifts to now becoming, and this is what, if you watched the head of Discovery Network. He was saying because of the change in technology and because of the democratization of distribution of content, the stations and the broadcasters no longer have the power that they used to. Okay, whether you're a broadcaster, whether you're a station, whatever you are, whether it's radio, television, anything, you don't have the power that you used to, because people can wake up in the morning and build their own audience on YouTube. That's what they can do. So what he said that Discovery is doing, and this is what all people in media, including ourselves, we need to start rethinking our business model, is to switch towards becoming production support and also supporting people's efforts in building their own audience on their own social media channels. So if you have that equipment, then the move is to say, hey, instead of telling you to broadcast, I can produce a podcast for you. I can produce your YouTube show for you. Should you want to, and if you want to sponsor the show, that's fine. So there's that flexibility that has had to start coming up and about, where the business models have to start changing a little bit, especially in the media space. That has been brought on by technology, and that's happening in Zambia right now. Okay, people think it's not. It's actually happening in Zambia. We went through the Zicta data where all the mainstream technology, be it TV, radio, these things, they're coming down while online. This is why Behind the Markets also has to be done online as well, because the audience is here as well. The audience is equally here as they are on air. So we have to make sure that we're covering both sides. So do you see what I mean, Stephanie, when I say for us who are in the world of finance, financial technology, and financial media, we've had to really start to reorient ourselves. And a lot of it has to do with change in perceptions and change in people's ideology and how that's affecting it, and also change in technology in how you can deliver service to people. I don't know if that caught your attention. Okay. I don't know if you're still with us, Stephanie. Right. So today's conversation, so we have asked, and some people here have said technology, and I can see that there is the conversation here that technology seems to be the driving force of change. Even on the market, by the way, one of the things that's probably driving things like Airtel stock, and I keep telling people that data services are one of their fastest growing revenue lines. And most ICT companies find out that data services are the fastest growing revenue lines. And with data services slowly becoming the fastest growing revenue line, you then are seeing that a lot of people who are offering something in the ICT space and in terms of data services seem to be growing faster. This is why Strive Masia is now investing in things across the continent, data centers and proper cloud technology, cloud computing technology. He's actually supporting a lot of that in Africa, and that's going to be his step. That's probably going to move him from a single billionaire to a multi-billionaire, because of the fact that that's what's actually growing their economic activity. So today I wanted to just continue from yesterday's conversation about this pastel model that we were looking at. Whenever you're looking at how to scan for opportunities and threats in your economy, and you're looking for opportunities you can attack and what we call tailwinds and headwinds. That's what you're looking for in the environment you're in. The reason is this, and I'm going to explain it. Opportunities are what make you money. Threats are what take your money. And I want someone to write that down. Opportunities are what make you money. Threats are what take your money. Okay? And threats are the things that will threaten to reduce your ability to make sales or increase the costs that you're going to experience of trying to make a sale or make money. So where are the opportunities lying in society? And opportunities are simply this: undiscovered or underserved needs in society that people are willing to pay for. That is where opportunities are found. Undiscovered or underserved needs in society, complaints and wishes that people have in this country, things they have to be forced to import. Where are the inconveniences? Where are things in the market where things could be done better? Things could be done bigger. Things could be done faster. Things could be done stronger. Things could be done simpler. Where are the things? I'll give you an example of myself. Why did we create financial education material? because when we read what was the barriers, we actually sat down, went through the studies, and read what were the barriers that were prohibiting people from investing in capital markets. I've been a practitioner as a dealer before. So all my life, what we were doing was selling investment products to people. What we didn't recognize was the first barrier people were facing was we don't understand this stuff. Okay, these are difficult concepts. So we said, okay, why don't we offer educational content first? Why don't you offer people education? Then if you offer them education, you can help them plan around it. Then once they're able to plan around it, then you can now start putting you can now start selling your services, whether you're a trader, whether you're a trader or whether you're an advisor. But the first thing you need to offer somebody is education and a plan. Okay? Because once they're enlightened and they're educated, then they feel encouraged and motivated then they feel enabled to actually act. So we were offering enabling services a lot. In the various entities I've worked with and I've owned, is that we've been offering enabling services as opposed to offering education and enlightenment. So the first thing people wanted was knowledge, and they wanted a plan. So that's what the data revealed. And also the growing number of people with interest in building their own wealth portfolios out of the middle class or the working class or the business owning class, that number has grown. And also the young people who are interested in that number grew. So it was those factors that changed in the market that now drove us to say, build this content first, then deliver a service next. That's how you kind of operate. So look at your market, but remember, this is a skill set area I've been operating in for 12 years now. So the question is, if you look at your skill set area, where are the gaps? What's happening in your city? What's happening in your town? And focus. In as much as we've been trained to focus on the government, one of the things you need to understand is government and policy are simply what we call tailwinds and headwinds. They're not the opportunities. The opportunities are found in social and technology. That's one of the things I'll tell you, because you have to look at what is secular and what is cyclical. And I know as a Christian nation, the use of the word secular can scare people. What secular simply means is it's not connected to an economic or political cycle. Okay, it's not connected to some sort of seasonal cycle. Okay, there are certain things government spends on a lot. Like in the media space, for example, everyone knows that government and politicians spend a lot in media adverts and media space during the political cycle. Okay, that's a cyclical opportunity. But once that cycle passes, the opportunity fades and you have to wait for the next cycle. So it's kind of like the way farming seasons are. So if you're trying to make money off politics in media, you're only going to make it once every 5 years. So the question is, what is the secular cycle? What is the secular issue? What is the issue that is not connected to a season, that can grow regardless of a season? Whether the economy is up, whether the economy is down, whether the political cycle is up, whether the political cycle is down. What is it that can grow regardless? And you're looking for mainly things that are social and technological. Social and technology are really affected. And the reason I point at technology is also because technology affects social. Social media has affected Zambian culture. Okay, so mobile phones have affected Zambian culture. Look at the use of mobile phones and the proliferation of mobile phones and how that's affected business culture when it comes to payments with mobile money. If you don't receive payments with mobile money now, you're actually at threat of customers walking out of your shop. So you have to be able to accept payments in mobile money unless you can force them to. Even petrol stations are finally starting to make the change of accepting payments with mobile money. Marketeers are starting to accept payments with mobile. In fact, they were some of the first ones to start accepting it. Restaurants accept payments with mobile money. Some of the stores, it's only one of the major stores which is still being stubborn. But a lot of people have had to do that because technology has changed the payment system that Zambians are the most comfortable with. Because Zambians are doing 51% of their payments through their phone. Okay, they're no longer going to the ATM as much as they used to withdraw money. They're no longer writing checks as much as they used to. They're withdrawing money and they're making payments through their phone. And that is one of the most fastest growing sections. And on top of that, Zambians are swiping more, and they're more comfortable with having a place where they can swipe. So card and phone have become the top two payment systems that the country is comfortable with, and the citizens of this country are comfortable with. So you can see how that's affected even the way you receive money from your clients. And if you don't accept things that way, then you're going to have trouble trying to do business with clients, because they'll turn around and say, we're not up for this. We're not really into this. We want to make payments by card. We want to make payments by mobile money. And if you don't accept that, you're adding friction to the way we do business with you. That has been a social and technological trend that has gone through all the seasons of the economy in this country and has continued to grow constantly. So if you want to look at things to invest in a business case, look at social and technological trends. You will often see that. And social and technological trends, and I'll give you the quick cue points to look for, is things like the changing age or the age profile of the population. Those are the social factors. Population size, population growth, birth rates. If you're selling education policies or if you're building schools, birth rates are very important to you. You're selling funeral policies, death rates are very important to you. Also, if you're doing financial planning and selling life insurance, death rates are also quite important to you. Number of marriages, number of divorces. Divorces affect people's financial status. So I have to make sure that when I'm doing family planning and when I'm doing family finance, I have to start asking questions about what are the potential triggers of divorce, because divorce is on the rise in this country. So people are actually looking at where are the risk factors in their money, because they're hearing horror stories of fellow couples that have gotten divorced and money was at the center of it. Immigration and immigration rates. Those are travel issues. Those are visa issues. Are you running a business in that area? Life expectancy rates. Life expectancy in Zambia is going to expand from 62 to 75. So people are now worried more and more about their retirement. They're no longer they're no longer getting to 50 and that's it. The average Zambian is going to live somewhere between 70 and 79 years. The average Zambian woman is going to live up to 78, 79 years by the year 2050. So she has to really be concerned about the fact that she's probably going to experience 30 to 20 years in retirement. So does she have the wealth to back that? Wealth distribution, social classes, per capita income, family sizes. The average middle class family in Zambia is shrinking. So therefore, the opportunities for selling education insurance is not as high as it used to be. But then again, the middle class families are more controlled in how many children they have. The average middle class family will have 2 kids, 3 kids. The average low income family will have 7 kids, 8 kids, 9 kids. Okay, and that's where the difference comes. So there's more inclination to plan family sizes. You can see that changing. Health consciousness. I've interviewed the owner of Umoyo before, and she's talked about how people are becoming more and more health conscious because health is becoming a huge cost in society. So things like that, attitudes to work, buying habits, ethical concerns, cultural norms, roles, gender roles, religion and beliefs, racial equality, use of birth control, education levels. Education levels affect my business directly because 79% of the most financially literate people are the people who have finished grade 12 at least and have gone into getting degrees, diploma, certificates, or masters. People who've gotten some form of tertiary. So the more education that I see amongst the people, that grows my market. So ask yourself, does education affect your market? Crime, attitudes towards saving, investing, retirement, leisure, quality, customer service, and foreign people. Look at these things. Focus on what the conversations people are having. I will tell you one of the best ways to look for business opportunities, and I'll end it here, is to start listening to the conversation. Be careful of chiming in to the constant complaints, but listen to the conversation of the specific non-political things people are complaining about. That is where the business opportunities lie in this country. It's in the non-political complaints that people are having in this country, because those are the problems they're facing. Listen to people's problems that are non-politically related and directly related to the quality of their life, and those are the things that they're probably willing to pay for. And I'll leave that there, Stephanie.
Thank you very much, Munyumba. On the other side, kind of unfortunate on part of the network, couldn't really get most of the things. But of course, till tomorrow again, it's bye for now.
Bye for now. Have a wonderful day.